commodities going up is what causes inflation. It's not that they hedge inflation. It's because think about what price inflation is. It's you're buying stuff, and the inputs to those are energy and grain and whatever needs to go into that. As the price of those things go up, the cost of things we buy goes up also, and it causes the price inflation.
I'm Stephen Fairbanks, a writer and teacher from St. Louis, Missouri, and you're listening to the Vance Crowe podcast.
Welcome back to the podcast. I'm glad you're here. Today, David Oransky returns. Longtime listeners of the podcast know I've had David on for the last few years, but over the last couple of months, I've invited him on once a month to talk about the economy. If you listen to the Vance Crowe podcast, you know that I am hyper interested in the economy, in inflation, in Bitcoin, but a lot of what I know about this comes from just my reading, being an amateur, and kind of watching what's going on in the world. So I like to have David come in because he brings a level of grounding and deep knowledge to the subject. In past interviews, we've done somewhat basic interviews about how does Bitcoin work and kind of then the next intermediate level. Today, what we're going to do is just have a conversation about economics and the way the world is going. If you're interested in any of the subjects we're talking about so that you can get involved in something like Bitcoin, go to some of the earlier episodes to get maybe some of the more core knowledge. We're going to get to the interview in just a moment, but I wanted to share about an experience I had the other day with Legacy Interviews. A father had called up, and he had done a Legacy interview, and he said, I really want to share this with my kids, but I don't really know how. Are they going to want to listen to this? I had a great conversation with them where I got to say, yes, actually, we get photographs from a lot of our past guests showing them watching their Legacy interview with their whole family. And they talk about how exciting and invigorating it is because they were able to tell stories that don't normally come up in everyday conversation. And then because they watched it as a family, they were able to pause it and get more details, get more laughs, and really be able to dig into the whole thing. So Legacy interviews are often more than just a gift and more than just the capturing of a story. It's a way to bring your whole family together. And if you're interested in having me sit down with one of your loved ones to record their family stories so that future generations can know their history, go to legacyinterviews.com to find out more. All right, without further ado, let's head to the interview with David Oransky. David Oransky, welcome back to the podcast.
Becoming a common occurrence here.
Yeah, man, I've really enjoyed this. I think that it's good not to have like, hey, we got to get all the economics conversations out as quick as we can. And I just had like a rather profound experience when I traveled to Canada. So I think my opening question to you is, are things getting more expensive for you, financial guy?
Things seem to always be getting more expensive. I mean, I'm still young enough in my career that my income has kept pace with my expenses. But every time I get to a level where once I get here, everything should be easy, it's always like my expenses have gone up in the meantime. I've also had multiple kids over that time. So I don't know what the steady state is for me, but I think if you look around and most of the people I talk to, there's a general feeling that things aren't getting easier, they're getting harder despite all the metrics saying they should be getting easier. And I think, we have these measures of consumer price index, which is supposed to be inflation. That the composition of that basket changes though over time. And so what your own inflation rate is might be different than what's stated. And I think that's, and also, do you want the standard of living to increase over time, or are you just trying to maintain that standard of living that you had 10 years ago? As we have technology and innovation, like we get new things in this world and people want to buy those things, whether it's the hedonic treadmill or not, like people want those. And if your wealth and income isn't going up higher than inflation, you may not be able to actually include all those things. So my sense is that people don't feel like it's getting easier, at least the vast majority of people. Yeah,
I mean, certainly like my grocery bill is going up because I have two little girls that are getting bigger and they, want to eat more. But like, I mean, anybody that's been the consistent person that goes to the grocery store says, this did not used to cost that.
Yeah, I hear that all the time.
But I did not feel it as acutely until I flew into Canada last week. I get out of the plane, walk through the airport, and I'm like, oh, I'm going to go get something to eat after I've gone through customs. And instantly I was like, this is literally the highest I have ever paid for fast food. Now, provided it's in Canadian dollars, but I was in Canada just last year a couple of times. And their prices for their restaurant meals inside of an airport were like staggering. I mean,
Just since a year ago.
Like, to the degree where you're like, I need to like actually budget this out. Like, should I be buying a hamburger or like, the Panda Chinese food or whatever it was that I was getting? It was really striking to me. And then the other experience that I had was coming back into the United States and being like, actually, I'm in the Denver airport. I've been to the Denver airport dozens, if not hundreds of times, and the food there is even more expensive. And it's like really surprising that even after somebody like me talking so much about inflation, watching it so closely, to be surprised by how quickly prices are rising.
Yeah. Yeah. You think it's worse in Canada than here, or just that juxtaposition of the exchange rate between the Canadian dollar and the US dollar made it obvious?
Both. I mean, like, what was surprising to me about the Canadian situation was, yes, my dollar buys a lot more in Canada. It's like, $1 US buys $1.30 in Canadian.
Yep.
So maybe not quite that much, but pretty much. But even still, the prices that were listed there, I didn't feel good about paying them when I converted them into dollars.
Yeah, I think a lot of people are feeling that. I mean, we've had a busy few months. We've been eating out more, and I noticed that, we take out a family of 5, and it's like, wow. And that's, with kids' meals. I can't imagine once they're eating full meals.
Yeah, and I think the other thing that was going on in Canada was, so I was invited to go to a place called Lloydminster, which is right at the border between Saskatchewan and Alberta. And so this is the Great Plains of Canada. It gets just barrenly cold up there. But Lloydminster is actually this really cool town because it's both a combination of agriculture and oil. So they're the heavy oil capital of the world. And in the Alberta side, I mean, Alberta has 10 times the amount of energy reserves that Texas does.
Wow.
They can't leverage it, of course, because their government says, you are not allowed, Alberta, to refine and then export this as a refined product. Instead, why don't you just send it down to the capital or send it down to the U.S.? We'll refine it for you and then export it from there. So, like, these two provinces, Saskatchewan and Alberta, from my perspective, are vassal states. You produce the raw commodity, and we'll take all the value off the top.
What's the argument for why they won't let them process it?
Well, a lot of it is like, where are you going to export it to? Every time they try and put a pipeline in, all of a sudden there's all these people coming out citing climate change and indigenous rights and, the dangers of having pipelines. So when they, the smart thing for a place like Alberta to do would be, hey, just run a pipeline over the Rocky Mountains. You've got a nice big warm water port and export it there. Have a good deal with British Columbia. But they can't do it. And so because of that, it means they have to rely on other provinces and the United States to take those goods at whatever they're worth at the raw commodity price instead of a refined thing. And while I was there, so I was given a speech, and I sat next to a former provincial judge who had retired, the mayor of Lloydminster, and like a local dignitary. And they were telling me when they built Alberta and Saskatchewan, first, Alberta and Saskatchewan wanted to be one giant province. So that way they could be like, we may be really wide and decentralized, but we've got the population to push back on the city.
Oh, interesting.
But then the other thing that happened was, as they were selling land to people who would presumably move out there and work the land, they gave it to them at a good price, saying, hey, we're going to let you buy this land, and then with that money that you pay us, we're going to build the railroad straight across here. But here's the catch. You are not allowed to build giant flour refining, like milling capability. All the milling has to be done back in the capital. So you could grow all this grain, but you had to put it on the train and ship it back. Yeah. And then if you wanted to get that back as flour, you had to buy it from them as milled flour. And so they've lived in this kind of perpetual state of being extracted, but the people themselves not able to really leverage it.
And has it over time they've gotten more power or lost even more control to?
Yeah, I would say lost even more. So a few years ago, I was up at this conference, and the geopolitical guy, Peter Zehan, was at the same conference I was at, and he stood up in front of this group of cattlemen, and he was like, and I know what you guys should do. You guys have all these reasons you should break away, and what you should do is become the 51st state of the United States. And I was like, oh man, you're going to get booed out of here. And in fact, the people cheered, right? I was like,
oh,
shocked.
really?
Yeah. And I personally will never go to Canada and tell them what I think they should do politically. But like, okay, he did that. And so that's when I noticed something's going on different in Canada than what I understood. And so I started looking into it. This is when I became friends with Sean Newman. And you see that these people out west are very clear that the old trope that they were telling themselves, oh, the city, it's just that they don't understand that we can't manage off of wind energy, or like, oh, we have all these oil reserves. They just don't understand it. Well, after the COVID lockdowns and the extreme pressure that they put on them, and then ultimately the trucker convoy, now they're saying like, oh, they're not confused, right? The people in the city are taking as much as they can from us. Yeah. And now we've got to figure out how are we going to live, because the trajectory that we're going on can't continue.
Yeah, that's interesting. So when you compare that to the U.S., are they living in the future? Like, we often think of the U.S. as always being the vanguard of always pushing things forward, and the other Western countries kind of, but it seems like maybe they're a forecasting of maybe what's to come here.
I think people kind of always look to Europe and be like, oh, look how sophisticated they are. One day we'll be as sophisticated as them. But the reality is, I think everything that's going on in Canada is happening faster in Canada because they have so much smaller of a population.
Yep.
And Canadians are in I think a high trust culture. I think they're breaking out of it, and we're watching the horrible sadness of people coming out of the Garden of Eden, where you're like, no, we all work together, we all get along, things work. But in a place like Lloydminster, right? So this is a town of 30,000 people, but they have all these volunteer organizations. They have all these chuck wagon races and, stampede and rodeo and hockey.
Oh, wow.
And they have all these activities that keep people engaged in the community. And so there's a much higher trust networks up there within those small towns. And I think that those people believe oh, this is the way we're living. So certainly the entirety of Canada is this way. And the reality was the people living in the cities don't live in a high trust environment. They live much more that's urban U.S.
That's interesting. If on the local level trust is increasing, but it's breaking down between greater distances or between the cities and the rural areas, and what does that mean? Where does that lead things? I mean, you see that in the U.S. too, right? Where people who aren't living in the cities often feel very misunderstood, or why aren't we being represented? And
yeah, I mean, I think when I go to Lloydminster, I think, what would we give here in the U.S. to have back what they have been able to pass down? But in the cities, these institutions have broken down. And sure, there's people that have church groups that they belong to, or some volunteering groups, but they're nowhere near as robust as they are in a small community where you can't be just lost to the anonymous crowd. I told the story at the beginning of my speech. I actually hadn't thought of this. When I was flying into Edmonton, so you're flying over all these fields, it looks like you're looking down on a cold, snowy Illinois, which is where I grew up. And I remembered my dad when I was 18 years old, and he was like, Vance, what do you want to do when you grow up and you get out of here? And I'm like, oh, all I want to do is see if I can make it in a big city. Yep. And my dad being like, Vance, a big city will welcome you with open arms, because they are grinding people out the back and they need new people. The real question is, if you've succeeded, if you're creating value, is do you even get invited to people's homes? Do you get invited to that small town more than once, right?
Right.
That's how you know that you're succeeding, because in the city, everything's anonymous. You're just a gear, whereas in a smaller town, you're a part of a network. You can be known, and that's something that when I'm there and I experience it, it makes me want to figure out how to have it here.
In that environment too, I feel like you care more about your reputation. The way you act is different and we've talked about this before, when you interact with the people, whether you like them or not, you act differently than when you can be anonymous.
And I think that allows people that have different opinions than you to have a positive impact on oh, I have to be exposed to these ideas, because I can't just roll my eyes and click don't show me this viewer anymore, right? Which is what you do on social media.
You're forced to interact with those ideas, but also in a respectful way, because you got to see the people.
Yeah. But as I spoke with Canadians up there, they are further down the path of we need to do something about this than most Americans are. And clearly this was like a microcosm where these are like ag people coming to the specific conference and talking to the speaker. But they are definitely like much more aware of what the government will do to them. There was much stronger lockdowns there.
Right.
They took people's bank accounts. So ultimately on the second day when I ended up talking about like, what should you do in this rural-urban conflict? Because I was invited to give a second talk. I was not, until I got there, I didn't know how far along people were. So the punchline of my talk got a lot further down the line. I would have been much more reluctant to say the things I said.
That's interesting, yeah. And you attribute that to that it was actually harsher there, mainly during COVID, or just in general that there's been more tension around those?
Oh, it's so much harsher there. So
Okay.
like the farmers right now are paying carbon tax credits for using fuel in their machinery, right? And they were supposed to get some kind of like dispensation, but it didn't work. And so ultimately, these are not carbon taxes where like the government is taking that money and putting it towards some giant carbon vacuum in the sky or some, magical thing.
It's
In
just a
fact, what they're
penalty.
doing is they're writing a rebate check to the people living in the city that are paying that carbon tax. They're saying, well, you
buy their
shouldn't have
electric
to.
cars.
So they're buying them. They're using that money, just to give them straight up checks, just straight
Just
up
stimulus
cash,
checks.
Stimulus checks.
Oh,
So
wow.
this is like really extractive out in the West, and it's happening over and over and over again. And their COVID lockdowns went way, way longer than
And they
ours
just
did
don't have the
here.
political power to make a change.
Yeah, I mean, like what we feel by being like, oh, there's some really densely populated cities, and those are the only ones that matter. They feel that hugely amplified. And in fact, they were telling me a rule that they made in Canada was during their, presidential election or their premier, whatever that guy is, the Trudeau, when they start doing the closing of the polling, in Nova Scotia, right? They already know who's won
Because of the population.
because of the
Yeah.
population. And so they started to make a rule. You just can't tell the people in Saskatchewan or Alberta on the news until their polls have closed who have
So
won.
that they feel like their vote still matters.
But it's just a lark, yeah. So these are the kinds of things that
Wow.
are going on in Canada that you're like, wow, this is like how much further it can go. And like all the stuff we see going on in the US, it takes us so much longer to feel those things.
Yeah, why?
I think partly our population, but I also think we have so many more things happening. You're
Okay.
watching what's going on in the Texas border.
Is that a difference with the states? Like the U.S. is such a unique structure where it's the United States. Like the states here have, at least on paper, significantly more power than provinces and regions in other countries. At least that's my interpretation of it. Do you think that's one of the reasons for that, or?
Yeah, I mean the judge, who I'll have him on if he'll come on, pointed out that enshrined in the U.S. Constitution is if the power is not specifically enumerated,
Right.
it goes back to the states, right? And there they don't have it, right? It's like
Yeah.
all the power is the federal power, and the Constitution is like these are what powers we're giving you or rights as individuals. And one of the crazy things, so I mentioned all this oil that's in Alberta. In the 1980s, the government said, nah, that's actually the Crown's oil. So if you decide on your land, hey, I'm going to hold this oil because I don't need the income right now, but one day this energy could be really valuable for my grandkids. Doesn't matter because they can go into your neighbor's property that he's agreed and they can milkshake that right out
I was
from
going
you.
to say
They
that's
just-
where the expression comes from.
Exactly. So they just take that pipe, walk over, underground, run it all the way to your oil reserves and suck them out. And so there's a few people that have oil wells in Canada that have been grandfathered in that they still own it and maybe they can pass it down one more time.
Oh, wow.
But like all of those mineral rights are going away. They're so totally different than the U.S. that one guy was telling me like, whatever you know about mineral rights, just forget it before you walk into Canada because it's so different.
Times are just getting crazier and crazier.
Well, so the thing that I was telling you about before the cameras got started was that, the first talk I gave was about how to tell better stories. They have these institutions, this AgriVision group that comes together once a year. They do all these events. So I was like, you guys have figured out how to pass down these institutions, so keep doing that. Keep telling stories because that's been lost here. But the second day I had a chance to talk about like what's going on rural and urban.
Yep.
And after having heard this dinner and like the things that were going on. I thought I knew what was going on with Canada because I listened to Sean Newman's podcast pretty much every week. I like took it really seriously and said something that's different than what a lot of people, a lot of companies go to the farmers and they say, hey, farmers, you need to tell your story. It's really important for the people in the city to hear you tell your story. And that's probably true.
Yeah.
But like, you couldn't stand up in front of a bunch of Canadians and say, the reason that all this stuff is happening to you is because you're not telling your story about how your farm is a 5th generation farm and you really care about it, because they don't care.
Yeah.
Right? Like, they're taking from you anyway. And so the punchline of the story was really like, what I believe you should do is focus on your community, and inside of your community, like, look at the 5 people that you spend the most time with.
Yep.
Because you know that famous line, you're the average of the 5 people you spend the most time with. Now include podcasts and movies and television shows, and see if that knocks anybody out of your list, because it's the same thing. If you're listening to hours of a podcaster more than you are your best friend, you're spending more time with that person. Yeah. And now the question is, who on that list of 5 do you respect, but that you disagree with the most? Because it's that person that whatever the distance is, that person is from like your regular belief set, that's the widest your window is going to be open to hearing new ideas.
Oh, interesting.
And you need to have that if you're going to avoid being a part of a mob. And then the next point that I made was, you all are sitting on all these energy reserves and they won't let you export it. Well, you have a magical thing that's just come up in the last 15 years,
right,
which is you could burn this energy yourselves and have Bitcoin miners sitting right there. So burn the energy, create electricity, use that electricity, use mines. And now if people want your Bitcoin, you've just digitized that energy and you can send it anywhere in the world. And I was like, I don't know how they're going to like this, but people really liked it. They wanted to talk about it. They wanted to know, how does that work? Where do they go? So the culture is definitely changing, that they're more open to it.
Energy and Bitcoin are increasingly becoming intertwined. I think people are finally starting to realize that connection there. I actually think that could be one of the best alliances in terms of those of us that want to see Bitcoin succeed, like, the energy sector, having them as an ally. And for purely profit-driven reasons, like, we don't even have to be aligned with, like, philosophically what we want. Like, it is mutually beneficial for those two to come together. And ironically, doing so would probably incentivize, the renewable energies that the, quote, other side wants, because it brings the cost of energy down for everybody and allows a lot of those alternative energies to be more sustainable.
Yeah, energy is the key thing here, right? Like, because people can look at energy and be like, oh, Bitcoin requires a lot of energy. Let's just put that argument and discussion aside for a second. Imagine a world in which you can always get paid for your energy generation, that there's so much demand for it that you can always get paid for it. Imagine the technologies we could develop, and the reason now all of a sudden, like, hey, let's build nuclear reactors that have a lot more energy than we even need right now. Now we can start getting that to people that don't have energy, because there is no such thing as a rich country that is poor with their energy. And so Bitcoin could help facilitate this.
Energy is like the base layer of much of society. In a way that money is different. Like, what's actually the inputs of that is going into everything isn't money. The input is energy ultimately, and money is just a way to transact in that.
Yeah, and the way that we use energy, like, we don't realize just how much, like, that we're using. That we have robots working at all times for us, and the way that the food for those robots is energy, because it just comes in this bill, and it is whatever they're going to charge you for it. You're going to pay it, because what else are you going to do? But we also don't have very much force on the other side being like, let's actively find new fossil fuels, new ways to do nuclear, new ways to do all kinds of things.
And yet if you look at standard of living over time, like, the line of energy usage going up and standard of living going up are, like, perfectly correlated there. Like, that's the way we improve our quality of life, is figuring out ways to use more energy to improve our lives. And so the idea shouldn't be to use less energy. Like, we should figure out better ways to, more efficient ways to get this energy, but the objective shouldn't be to reduce energy.
And because that's ultimately a losing gambit. You are always going to need energy, so why not try and find the absolute...
And the idea that you can convince everyone not to, like, it's the whole prisoner's dilemma. As soon as one nation, one company, one whatever decides, I'm not gonna, voluntarily not use energy because I see how much better my life could be if I did use energy, they're gonna do it, and then you create this imbalance, and, like, it's I don't think you could stop it even if you wanted to.
Yeah, but there's certainly people that are trying. Like,
Yeah.
And you think about talking to somebody that's like, we need to use less energy and less flights on airplanes and things like this. Like, to what end? Like, at what point would reducing be enough for you?
Yeah.
Never.
Yeah, exactly. Yeah.
Well, so a lot that goes on with Bitcoining, mining is energy, and the hash rate has been just on a rip lately. Have you been watching this?
Yeah, I don't watch the hash rate as much as you, but it tends to be, why would the hash rate be increasing? Like, if the price stays where it is, it will become unprofitable for a lot of miners, especially after the halving comes in April. And the reason is that miners are expecting the price to go up over time. Like, I expect the price to go up over time. I don't have strong conviction on exactly when that happens, but to me, the hash rate going up is a positive indicator for Bitcoin's future.
Oh, I mean, like, if you're mining, you're like, oh, that's just cutting into my profitability. But if you're sitting there watching for the resilience of the network, and you're saying, hey, every time more computers come on and they are contributing to this, it makes it stronger. And you're watching. So there, back in, what was it, 2020 when China banned mining?
Yeah.
So, like,
that sounds right.
You had all these miners there, a significant amount of miners, significant amount of electricity that, like, overnight.
It's like half the hash rate, I think.
I think it was like 35%.
Okay. Significant.
Like, yeah. Like, so you watch the hash rate just go like down. And then what they do is the code automatically recalibrates and makes it so we're still going to get a new block about every 10 minutes. So it went down, and about 4 weeks later, they had already recovered all that hash rate. So all those computers that were going as fast as they could in China that they shut off, fine. Once they went offline, people bought more computers, miners, and put them on there.
And that's the beautiful thing about Bitcoin. Like, and what happened to Bitcoin? They lost 30% of the mining operations. And what happened? Block times got a little bit longer for a week or so. Like, it just didn't skip a beat, and it went on. And that's the other thing. Like, this is why it's so hard to kill Bitcoin. It would take everyone coordinated to turn off all the Bitcoin miners and all the nodes and keep them off. But as long as you get one dissident that says, I'm going to keep mining, I'm going to keep my node going, the whole system can come springing back to life.
And the just this last week, the Bitcoin hash rate went up 10%, right? So like, of all the computing power in the entire world that is going towards this, and people are plugging these things in and being like, I'm plugging in this miner and I'm going to get money back for this.
Yeah.
It just increased by 10%, in 1 week, which is staggering. And it's improving the strength of the network. But like, to your point, it's not like people just investing in an ETF that are like, hey, I think I'm going to get some price volatility if it goes up and I decide to sell. Fine. People that are doing mining, like, they are buying equipment. It's going to take them 3 months to receive that equipment. The first 3 months of plugging that miner in is when it's going to be it's the top of the technology stack. It's the top of the wave. And then it starts to go down because other people are bringing faster and faster miners on. And so to watch these spikes go on is like watching people say, I am making a capital investment into this for the long term. The hash rate doesn't happen by accident.
No, and how the miners but each of these players is an important piece of the Bitcoin ecosystem. Like, just the people that buy and hold, whether it be through the ETF or buying directly, is one piece of it that's creating demand such that the miners have an incentive to mine. And like, everybody comes together with these checks and balances. Like, Bitcoin's one of those systems that's like, it's amazing how simple it is, but how perfectly aligned the incentives are to have this system just work with zero coordinated, top-down coordination. This is all just free market dynamics, everybody acting in their best interests, and yet it comes together in this very efficient way.
Yeah, I mean, it really is that kind of Mises philosophy of like, markets will work if you let them go. And then people look around and they're like, no, this U.S. has a free market and look how corrupted it is. And you're like, no, they have red tape and bureaucracy and, all these like coordinators that you have to get involved with. But with Bitcoin, it's like,
it's
the code
arguably
is
the
what
freest
the code
market
is.
there is. Yeah.
So the aligned incentives, this reminds me of the fact you and I went out to dinner the other night with one of our good friends, and we were talking about aligning our incentives with our children. And I had an awesome experience the other day. I'm dropping my wife off at the airport. The girls are with me. We're driving back, and my daughter, my 3-year-old, is in the sun, and she's like, Dad, I need some sunglasses. And I'm like, what kind of sunglasses would you get? She was like, pink sunglasses with sparkles. And I'm like, okay, so you want pink sunglasses with sparkles? And she's like, yeah. And I'm like, well, do you want to wait until your birthday? That's in August. She's like, no, I want them sooner than that. And I was like, well, then have I got a world for you? So I started to explain to her that she has chores at home that are like just a part of her being in the family.
Yeah.
But if she were to get all those chores done, then we could discuss an additional chore or two that would help her earn this money.
Mm-hmm.
And I thought there was going to be resistance there. No. She like would not stop asking me about like, when can I do those chores? So she like was, in the fireplace digging out all the ash and putting it in the bucket. And I just wanted to thank you about that, because it was like you were telling me like the way you get your kids to behave is align the incentives.
That's what I'm always looking for. I don't figure it out often, but every now and then I figure something out.
Of aligned incentives, one of the things that I heard a guy talking about this weekend that I had never thought of, and I'd be interested to hear your take on it. He was saying the reason that housing prices are up so high is because people are trying to preserve their wealth by investing it into property, right? A way to hold its value. But that ultimately the amount that it has been used as a store of wealth has actually increased the price beyond the utility that you get from having a house, right?
Yeah.
Because you can't really live in two houses, right? And as you go from having a summer house to a winter house, okay, let's say you get a third one, like eventually you can't live there.
Right.
What you can do is turn it into an asset that's earning you money. But that his proposal was that the housing market is wildly overvalued because almost all the people that own it aren't using it.
Yeah. I mean, that's my general feeling too. The hard part is quantifying that. I mean, this is an argument that I've made in general, that many assets that have been great investments over the last few decades are ones that are arguably being used as a savings account, because the dollar isn't a good savings account, whether that be stocks or real estate being the two big ones. And that I worry that in a world where Bitcoin continues to be successful and gets a reputation for being a good store of value that more and more people want to adopt, that the value will flow out of real estate and stocks into Bitcoin, and that there could be not just, normal volatility, but kind of a one-time adjustment back down, where, right, we talk about PE ratios in finance, which is the price to earnings, like how expensive is an investment relative to the cash flow it's producing, basically. And right now, real estate and stocks are really expensive by historical standards. And, a lot of people believe they're just permanently higher, that this is just structural change in how the world works. And it might be if you look just at the lens of fiat currencies. But I think that changes once you have Bitcoin, that actually people are really desiring a store of value, and Bitcoin is a better, more portable, more scarce store of value. And that I worry that those could come back down, and which means a lot of people who are getting ready to retire or saving for retirement may not have as much wealth there as they think they do. And I usually get met with, well, how much is it going to go down? I don't know. It's hard to tease out how much monetary premium is baked into things like real estate. Directionally, though, I'm fairly confident that's the case. And in a world without Bitcoin, those might be the best store of value, but I think it's not anymore.
Yeah, I mean, I have a lot of friends that are in real estate. I would not tell them what to do. They've done very well financially. But it was the first time I had ever considered that, well, if you own property, the only way to maintain its value is to keep that property up.
Right.
You are getting charged property taxes, so inherently the value is getting chopped away. So you have to either charge rent, or you have to get enough utility out of that that supersedes.
It's not
that.
A true passive investment.
It's not a savings account, right? And then you think about, well, once you have your money in Bitcoin, once you've paid you've bought it and you've paid the fees to move it, because there is that first, that one-time fee. Now you don't have carrying costs year in and year out. So long as the government stays out of it, you won't have it taxed away to nothing the same way that land will.
You're not having to pay to maintain it. You're not having to worry about tenants. You're not having to worry about natural disasters. You're not I think if the reason you were holding real estate was a store of value, there are better options out there now. But real estate will always be valuable. People need places to live. You need places to farm. There will be. I don't think that real estate's going to zero. The downside risk or the risk of ruin on something like real estate and stocks versus, fiat cash or bonds is very different. And that's what's kind of ironic. In the short term, things like, cash and short-term bonds are arguably the safest investment over a very short time horizon. but over like a century time horizon, they're arguably like the most risky. And so when we talk about risk in terms of portfolios and finance, like what are we talking about? Like usually we use a proxy for risk, volatility, like how much something bounces around as a proxy for risk. But really that's not risk over a long time period. Risk is like losing that purchasing power and having it never coming back. And so, yeah, I don't think real estate's bad long term, but I do worry it's kind of inflated and will come back.
Yeah, I mean, like it's just like everything else. When you have interference in the market, right? The price of it gets distorted.
Yeah. And
I mean, it's hard to convince people that it's not distorted. If you own a house and you're going to Zillow and you're like, hey, that thing went from $500,000 to $750,000, like you definitely feel more confident in whatever system is going on that you have that buying power.
Yeah, interestingly, though, the correlation of like real estate prices over time and the money supply are also somewhat correlated. Like as we printed more money, like so this is a question, like how much of real estate's appreciation is just that there's more dollars floating out there? I would argue at least a portion of it.
Well, and that goes with an argument or a disagreement you and I have had for a long time, which is I think so much of the stock market is complete zombie money my base case for it is every Friday, people are getting their paycheck deposited into their bank accounts, and then they have a certain amount of money that's taken out for their 401k. The company matches it, you drop it in there. Now you can't touch that for 20, 25, 30 years, right? But that money is now getting pumped into the system, and it's getting pumped in at whatever, asset, whatever allocation you set it up as. I want it to go into this index fund, or I want it to go into these, mutual funds, or whatever that is. So there's all this money pumping into the system, and the people that are pumping it in are completely blind, and other people are trading, and they're trading based on like factors that are not necessarily aligned with what is this company producing, how is it doing, what is its inventory, these kinds of things.
Yeah, I think that's all true. But most of these are passive investors, meaning that they're buying the total stock market. And so this is where I think it matters. Like, there's been an argument for years about is passive investing or index fund investing bad for the markets, bad for the economy, because of, I think, what you're alluding to, that people are indiscriminately investing money in companies without actually analyzing the fundamentals. And a true passive investor is just buying the whole market as it is. So what we would call cap weighted or value weighted. So the biggest companies, like Apple and Microsoft, would get more of your dollars when you invest. You're not splitting your investment up equally across the number of companies. You're not dividing it. If there's 500 companies, you're not dividing it, and you have $500, you're not putting $1 in each one. You're putting more of your wealth in the one that's biggest. And how are the value of those companies determined? They're determined based on the number of shares they have and what the market price of those shares is. So then the question is, who's determining the price of those? If every Friday I go and I'm just buying them a slice of the market as it is, I'm not really, relative to those companies, I'm not really affecting the price, because I'm spreading my dollars out proportionally to their current values. So the relative values between the companies isn't really, I'm not putting my thumb on the scale for one or the other. It can become an issue if, for say, you say, I'm just going to invest in the NASDAQ. I'm just going to invest in the S&P 500, where it's a subset of stocks that you are adding more dollars flowing into those stocks and leaving other stocks off. So there you can have mismatches there. But at the end of the day, the prices are being set by the active traders. So most of the because all prices are set at the margin. If I buy and hold stocks, the fact that I hold those, I'm not actively in the market, bidding and asking and getting bids and asks for those shares and affecting the market price. So the people that are out there actively trading, whether it be hedge funds or active mutual fund managers, they're the ones doing the fundamental analysis to determine the relative prices between all these stocks. And basically all the passive investors are free riding off that. So does it mean that the stock market is elevated as a whole relative to other assets? I think that is probably true, but does it mean that that investors are keeping these zombie companies alive? I don't think that you can blame that on passive investors, at least broad passive investors. I think the Federal Reserve and government policies of low interest rates and not allowing companies that have taken on too much debt and don't have profitable businesses with a good future, and we're keeping them alive because of low interest rates for so many years. that does keep zombie companies alive, but I would just place the blame elsewhere.
I mean, like the whole discussion about money just getting pumped in, and that money has to go somewhere, right?
Yep.
So like, there's certainly however much money people are taking out for retirement, that balloon is still getting blown up faster by people pumping money into the system. So that's one thing. But I would say about the traders that know they're trading on some kind of fundamentals. I had a chance at a couple different times in my life where I was invited in to be like, hey, you want to work in investor relations? Mm-hmm. So I would sit down and talk with people in investor relations for quite a while.
Yep.
And I would ask them detailed questions about what is it that this company owns, right? What is it that we are producing? And I would say it is the rule rather than the exception that they do not know what the company owns, right? Like you can't. In these giant companies, they are way too big to understand what do you own, what are you selling, what is your workforce like. Like, I think that we've convinced ourselves that we can, or that you can like boil it down or distill it to something, and the reality is like, you can't.
Yeah, I don't think any one person knows all of that, but that's the beautiful thing about markets. Like, if you do have a piece of information that you think isn't properly priced in the market, you can act on that. You can go either buy or sell relative to that position. Like if you think a company has some valuable thing that other people are underappreciating, you can go buy the stock in that company, which adds demand for that company and pushes the price up for everybody, including all those passive investors. So as long as there's somebody out there having an argument with somebody else about what the fair value is, and they have the capital to, vote with their capital, that gets baked into the markets. That's my view. Does it work perfectly efficiently? Absolutely not. But it's always trending towards being more efficient. I mean, as a analogy that takes it to the other. I mean, imagine there's an estate sale and there's some famous painting by some famous artist, and this isn't my area of expertise, so I wouldn't be able to name them. And the person who's running the estate sale has no idea that this is some great work of art. They just think it's a random painting, and so they price it appropriately. If someone shows up to that yard sale and identifies it as a famous painting, they might get to take it off their hands for really cheap, really inefficient market, even because the seller has no idea. But what if two people show up and they both recognize that that painting listed for $100 is really worth $100,000? They're going to keep bidding each other up until it gets close to that price. So you don't need to have everybody know the information. You just have to have at least two people with enough capital and with that information to properly set that price for everybody else.
I grew up on a diet of the markets are like efficient, and this is how it works. My father was a stockbroker. These are the arguments I've heard many times. And I agree in theory that this is the way that it should work.
Yeah.
But that I would say that the complexity of these companies is such that it is literally not possible, because what you don't see in that estate plan is, yes, that painting should have gone for $100,000 on the open market, it would, but you also don't see the colossal amounts of debt, the hole in the backyard that is going to be a liability. Like, I mean, you can give other examples, but my point is, I think in the U.S. capital system, we have been convinced that it is efficient, and it is actually being run by communications departments that do not know what they are buying and selling.
Yeah, I would never make the argument that markets are purely efficient. Like, they're clearly not, and you will never have perfect information. At least in liquid public markets, though, I take the opinion of, just like the wheels on my car or the tires on my car are not perfectly, symmetrical and round, but they're close enough that it gets me where I'm going just fine. So I still use the model of efficient markets in general, but it's also important to notice when things are really out of whack. But also, markets can be efficient and still wrong. Like, markets being efficient doesn't mean that the price is always right. It just means that it's a fair representation based on what everyone in the market, acting on their own information is, voting with that, and that the prices are fair.
Well, I mean, price is fair. That's like a funny thing, because I'm in the total belief is, what is the fair price? Whatever somebody's willing to sell for, that somebody else is willing to buy for.
So this is what's different between value and price, because if you value something more than its price, you will buy it. That's what will compel you to buy it, which increases the demand for it and will just nudge the price up a little bit more. So the price may not be your value to it, and that's kind of the point. People always talk about how there's so much information contained in prices that, markets are these great aggregators, and they, all that information gets, condensed into this one price. And from that, like, you can tell a lot about markets based on the price. Maybe, but I actually think prices don't contain hardly any information at all. They've actually distilled it down to get rid of all the unnecessary information, so that all you need to know as an individual economic actor is what's the price, and do I value that in my life more or less than what its price is, and you act accordingly. And so I don't know. I also don't think, because outside of Bitcoin, which is only like a small percentage of my portfolio and what I recommend, like, we mostly do invest in passive funds, and we're not doing many sector funds. We're buying like the whole world, basically global equities. And from that regard, you actually don't even need to believe in efficient markets for that to be a good investment thesis. Jack Bogle's famous for saying, like, it's the instead of the efficient market hypothesis, it's the costs matter hypothesis. Like, in aggregate, the whole world owns all the companies, right? Somebody always has to own these companies. So you as a passive investor is coming in and just buying one slice of that in its perfect weight. So that means that the aggregate market return will be the same return before fees as you as the passive investor had. There's no way around it. It's just a mathematical identity. The difference is, and that also means that all the active investors, the ones that are coming in saying, no, I want to own this stock or this stock because these ones are better, those are the bad ones, someone has to be on the other side of that trade. Someone else is owning all the stocks that they don't want. And you add up all the active investors together and put them in one pot, and guess what they own collectively? The market. Their return in aggregate will be the same as the passive investor. The difference is their fees will be much, much higher. So if you're agnostically just wanting to invest, which is a whole debate whether you should be, I still believe that passive investing should be your default way to do it. Now, if I can identify in the market something that you believe to be true, or you have information, it's unlikely you're going to have any special private information, and if you did, you're not allowed to act on it. But what you can have, and I think this is true about Bitcoin, you have a view that is out of consensus with the market because you identify things that other people haven't realized. That you can make a lot of money by being right and out of consensus with the market. Because if you believe something to be true, but the whole market kind of believes it, that's already baked in the price, you're not going to get huge returns. You're going to get the average market return, maybe 5% above inflation. Whereas if you can identify something that everyone else has gotten wrong for whatever reasons, and I think that's where the inefficiencies are. I think Bitcoin, for example, is very, very misunderstood about what it is. So I don't know. I'm that weird. I'm a Boglehead and Bitcoiner, which are two groups that rarely mix. I believe in passive investing.
I think you've made a good case for it. The one that strikes me is when people get into, say, like ESG funds, right?
Yeah.
And so they say, I want you to do this. I want you to invest my money based on scores that people get for sustainability, I'm not entirely sure how those are constructed, but that really sends weird information into the market.
And that's because they're valuing something other than pure profits, which is fine. People can express whatever preferences they have in the market. That also creates an opportunity for investors that are agnostic and that are purely viewing investing as a means to an end of generating, more profits, to say, well, because there's now this artificial demand for, say ESG companies, whatever that may mean, that would mean that the cost of what they're trying to do is make the cost of capital higher for the companies they don't like, meaning it's more expensive for them to borrow money or to raise capital. Well, what's the opposite of cost of capital for a company is expected return to the investor. So if you're an investor with capital that you're trying to deploy, they now have made it more profitable to go invest in energy companies, which is why if you look at the expected returns or the price to earnings ratios of energy companies right now, they look really, really attractive relative to what might be on the other end of the spectrum.
Because people have been convinced to put their money in places that are not.
Well, I don't think they've been. Some of them have been convinced that the returns are going to be higher. I think for a lot of them, it aligns with their beliefs that aren't always aligned with maximizing profits, and that's okay. They should be allowed to express that way. I never understood that until Bitcoin. Like, I think Bitcoin is going to be a really well-performing asset, but I also think a lot of people are into Bitcoin because of the ideals that it represents in terms of various freedoms and liberties of being able to act without permission and all that stuff. That I know a lot of Bitcoiners that would hold Bitcoin even if they didn't think the price was going to go up more than the stock market. And so I kind of can understand that a little bit more now. But it's also easy with Bitcoin because I think both of them are aligned.
Is there a fund that is the opposite of ESG? Can you be like, I want to invest?
I think there was, I feel like there's an ETF or mutual fund, I can't remember the ticker of, it's basically made up of like sin stocks. It's tobacco companies and like, and after,
I mean, typically that would be undervalued.
And if I'm remembering, I think I've seen, like, it's actually done quite well, which you would expect if people are choosing not to own these, not for monetary economic reasons, but for, philosophical reasons. There's an opportunity there. I mean, that's not my investment strategy. I'm far more agnostic of just, trying to buy the world as it is, because unless I think I have some special insight, I'm not really willing to take a bet. I'm always wondering, like, I could be wrong. I could be wrong about Bitcoin, and that's why I don't have everything in Bitcoin. I'm also bullish enough on Bitcoin that I think you only need a small percent to have a really good outcome. But we own U.S. stocks, international stocks. We own bonds. As much as worried as I am about bonds, I think that's still one of the safest things in the short term.
What do you mean worried about bonds?
I mean, I worry about inflation in general. And by inflation here, I'm a lot more confident that we're going to have debasement, meaning we're printing money, we're expanding the money supply, which classically would have been very linked to inflation. As you print more money, the bigger you end up with more dollars chasing the same number of goods, and you get inflation. Over the last century or so, we've had such amazing, starting with the Industrial Revolution, really, we've increased the production of goods and services so much that we've been able to print a lot of money without having the prices of things going up. Because although the money supply has been expanding, so have the things that they're buying. And so it's allowed price inflation to stay lower. But there's no little doubt in my mind, I should say, that we will continue printing dollars. We have to. We have a credit-based system that has to constantly expand, or it implodes and we get something worse than the Great Depression, which, because we have the power to avoid that by printing money, that is what we'll do. But that means that we produce a new risk of potentially high or runaway inflation if it gets out of hand. And if you look around world history, like the places where inflation has shown up, whether it be, Weimar Germany or Zimbabwe or any number of places throughout history, once you get inflation, it reduces the real value of those bonds. So in some of those places, they had inflation because they had debts in some other currency that they couldn't print, and they just kind of eventually became insolvent. In the US, we aren't likely to default on our debt. We can always pay it because we have a money printer, but that means we will continue just to stoke inflation by printing money. And so with that, bonds could go down in value. They will always pay back what they promised to. When you buy a bond, you're basically lending $1,000, getting paid an interest rate, and then you get your money back, that $1,000 back at the end of the term, whether it be 5 years or 10 years or 20 years or 30 years. And I think if you're buying US debt, you will almost certainly get that back at the end of the period. The question is, does the purchasing power of that $1,000, has that gone down over that period? And I think that's the real risk. Bonds are safe in nominal terms. US Treasuries are safe in nominal terms, but will it buy you what you think it's going to buy? And there's actually a recent study by a few finance professors that came out this fall looking at around the world data sets, not just US data, which is what most financial analysis is based on, but around the world, what's the best investment portfolio to hold during your working years and during your retirement years, if you couldn't choose like what country you were born into. And the idea of this is that although the US has had a great run, like, what does the future look like? Is the past likely to repeat itself? Or what if we were, what if we had an experience that looked more like Japan or any other developed country in the world? And so they looked at this, and the conclusion that they came to is that the safest investment portfolio over long periods of time, so not looking at volatility, but looking at like that you didn't run out of money, basically, is global stocks, 50% domestic, whether that be, if you live in the US, that'd be US, and 50% internationally, and zero bonds, which has given a lot of people like, what? Because convention in finance is, you need stocks and bonds, and as you get older, you want more bonds because you can't take as much risk. And if you look into the reasons for why bonds failed and why they don't make sense in a super long-term portfolio, it's inflation. The real value of those bonds starts approaching zero as inflation takes off. In the U.S., we haven't seen that because the U.S. has won 2 world wars. We've been the powerhouse for the last century. But if you lived in another country, it was a far worse experience. And so this is still a relatively new paper. There haven't been many rebuttals to it yet. I haven't looked through the data enough to see if there's certain methodologies that don't make sense. But to me, it isn't inconsistent with the, what I've studied by learning about gold and Bitcoin in terms of what happens around the world. And so to me, the implications are not that everyone should get rid of bonds, because I think most people probably can't handle the volatility of a full equity portfolio, but that you should think about, there are other options out there. Is, for example, gold a better alternative to long-term bonds? Like, should you really be lending money for 20 or 30 years when inflation has a risk of taking off? Maybe shorter-term bonds make sense. Maybe if you want to hold a savings vehicle for long-term, it should be something like gold, or aspirationally Bitcoin. The other thing that study didn't look at, which now exists at least in the US, are inflation-protected bonds. You can buy inflation-protected bonds from the US government that gives you some protection against not monetary debasement, but against price inflation, which is what we're buying. And I think it's not perfect. It's tied to CPI, which may not perfectly correlate to your own consumption habits, but it's close enough. It's the best that's out there. I think that's one. Although interestingly, when I was looking into this afterwards, I learned that in Canada, back to Canada, they also had inflation-protected bonds. And in fall of 2022, which was kind of right as inflation was peaking around the world, what did Canada do? They stopped issuing inflation-protected bonds. They said, there just hasn't been enough demand for these. They've been out for decades, and suddenly the first time we get inflation in the time period that they've been out, they say, oh, no demand, we got to cut these off, which for me was like, oh man, that's interesting. I would guess there's something more to that than just lack of demand.
And what's your sense for what that would be?
That when you are a country that, and I don't know Canada as well. I live in the U.S. and everything is U.S. centric in terms of my finance world. But in the U.S., we aren't likely to default on our debt by not paying our debt. We're going to default by printing money and devaluing that currency. And that's what, right now we have a debt to GDP ratio of like 120%, maybe 130% now. And how do you solve that? You either need to have significant growth, which we've had deteriorating growth for a while, so that's going to be hard, or you need to effectively inflate away the debt. And so you inflate away the debt by printing more money, but that causes inflation. And if you have too many inflation-linked bonds or programs, whether that be Social Security or anything else that's inflation-linked, it becomes a problem because as you print more money, you cause inflation. You have to print more money to make all those, your Social Security holders, your bond holders keep up with inflation. And so you can't ever solve the problem. You can't inflate away the debt. What you need to be able to do is have liabilities that are not tied to inflation. And so to me, that could be like, whether premeditated or not, if we eventually are in a position where you have to inflate away the debt, it would be better from a government standpoint not to have inflation-protected bonds.
Yeah, not
and
to
so
have to pay that
maybe
on top
maybe
of it.
close the window so that that doesn't become a limiting factor if you need to use that tool, down the road. So it makes me wonder. Like, I don't know. I haven't heard any rumblings in the U.S. of getting rid of tips, but it makes me glad that we already own a bunch of them. I doubt they're pulling them back. It's a contractual relationship. It's just whether they'll issue more.
So as you think about things like interest rates, these get changed when a wizard walks away from his special wizard meeting and then he stands in front of a podium and says these magical words where he's not actually saying what he thinks. He's saying these words that will trigger
that's a lot of what it is.
All these symbols and what do you think? How has the Jerome Powell managing the economy gone so far? What do you think of the wizardry behind it?
Yeah, I mean, we can debate, and in circles where people are talking about gold and Bitcoin, there often is a debate about what role a central bank should even have. But if we just assume that this is the system we have and Jay Powell's job is to, fight inflation and keep unemployment at reasonable levels and maintain stability in the financial system, he's done a better job than I think many people expected. Like, if you just take that mandate that that's his objective and that the Federal Reserve exists and this is their role, he's done so far a pretty good job. Like, I don't know that we're going to have this soft landing, but we haven't had a hard landing, at least yet. So I don't know. I'm more in that camp of I question how much they should be involved, but he hasn't dropped the ball yet. I think he is going to be in a position where he's increasingly having to fight the Treasury, in terms of, the Fed is trying to maintain tighter monetary policy to keep inflation down. At the same time, you have the Treasury now issuing, lots of short-term bonds and continuing to do deficit spending, which is, the equivalent of easy monetary policy. It's stimulative into the economy. And this whole idea of fiscal dominance, I think we maybe talked about a little bit last time or touched on it. Lynn Alden talks a lot about it. Increasingly seems to be taking over, where the stimulatory effects of what the Treasury and the U.S. government is doing are more than offsetting the tight monetary policy that the Fed is able to do. And that as this continues on, the longer we keep interest rates higher, the more stimulative it becomes, because now instead of paying 1 or 2% on our bonds, we're paying 5%. So that's more money that's being pumped in, given out to all the bondholders, and then goes and gets spent on other assets or other consumption goods. And that eventually higher interest rates end up having the opposite effect that we hoped they would. So we'll see where that goes. I think ultimately the Fed has a lot of control over the short-term interest rates. They don't necessarily have as much control over long-term interest rates, and I think that's the concern, where you could see if people start to lose confidence in the U.S.'s ability to pay its debt back, you could have a situation where the dollar is doing quite well relative to other currencies, but U.S. treasuries, especially long-term treasuries, are not. The yields are going up, which means the prices are going down. I think that's a real possibility in the coming, decade, 2 decades.
Yeah, you often talk about how slow it could move into the U.S. system because of they call it the milkshake theory, right?
Yeah.
Where you explain it better than I can.
Yeah, so this was a term coined by Brent Johnson, who's a fund manager or investment advisor, and the idea is basically that, and he's actually a gold bug. Like, he gets criticized a lot by everybody because he's seems to be defending the dollar. But he's actually, his like fund is like the Santiago Gold Fund. Like, he's primarily a gold bug. He just has a different view than most of the other gold bugs. And his view is that the U.S. dollar, being the world's reserve currency, has a lot of special powers with it. And one of those is that we can set basically monetary policy for most of the world. They all need dollars to pay off their debt. We've got the whole euro dollar system where they owe money to each other, and they're kind of outside of the normal Federal Reserve System where they can get, cheap lending directly from the Fed. And so in order to de-dollarize, they first have to pay off all their dollar-denominated debt, which means that actually creates more demand for dollars. And as they're paying off that debt, the dollars get harder and harder to get, because that debt, most of the money we have was created by debt being issued. And so as the debt goes away, dollars are destroyed, which means fewer and fewer dollars to pay off the remaining debt. And you get this kind of race to zero where in order to get off the dollar, you have to cut off your own arms and legs. And so people aren't really going to want to de-dollarize. But even if we try to, the dollar is going to go up in value all along the way. Now, he ultimately believes the dollar eventually fails and gold becomes really valuable, or at least the dollar goes down relative to gold. But he thinks in the short term, the dollar goes up. And I think there's at least some credence to that. I would rather own the U.S. dollar than any other fiat currency. But I think there's a world where the dollar does well relative to other currencies, but still does poorly relative to things like gold and stocks and Bitcoin.
Yeah, it's hard to imagine a scenario where we picture like the U.S. dollar holding value, right? Like, it's not losing value as fast as maybe in other places, but like, I can't imagine a world in which, I gather up a bunch of dollars to be able to give to my children because they're going to expect that they'd be able to use those dollars in the future. Yeah. And so it's an interesting thing to ask yourself, like, okay, if that's the worldview that you have, Vance, at what time frame, at what interval does this occur? And I can tell you that my experience of flying back into Denver and eating in the restaurants in the airport, which I'd done so many times before, where I was like, this actually, the money is losing money value faster than what even me, the inflation person, like, it's happening faster than what I thought.
Yeah, and this is where I have to separate. I'm very confident they're going to print money and debase the currency. I'm reasonably confident we're going to have some waves of inflation here higher than what we've had in the past, but I don't know that in the short term we get runaway price inflation. I'm less convinced of that, but I'm positioned such that if that happens, like, we should be okay. So when I think of looking at the portfolio, like, what does well in an environment where we are printing money, but the price inflation isn't going crazy? So, people aren't in a lot of pain yet. things like stocks probably do really well. Things like Bitcoin probably do really well. And that's kind of the environment we've been in for, decades now, where we're printing lots of money, but it doesn't show up in price inflation. And that can be, what could get us there? If this AI stuff really is as amazing as, they say it's going to be in terms of productivity, that could allow us to have more goods and services with fewer inputs and allow us to print more money without causing price inflation. At the same time, that will also put a lot of people out of work. And what are they going to want? They're going to want stimulus checks. And so we're going to have to print money. I think we could get there. And again, that's where owning scarce assets is really valuable. In a world where we get actual price inflation, I think one of the most underappreciated assets right now is back to energy. Energy's sold off a lot. People, think that this energy transition is going to happen overnight. I think in that world, you probably want some commodity exposure, because that commodities are going to have a little bit closer of a hedge to actual price inflation, whereas monetary assets, gold, Bitcoin, stocks, and real estate to some degree, having monetary premium, do well in a debasement scenario.
Huh. I guess I'd not delineated it that way, but yeah, you're right. So in the commodity world, those prices are reflective of what's going on right now.
Well, because commodities going up is what causes inflation. It's not that they hedge inflation. It's because think about what price inflation is. It's you're buying stuff, and the inputs to those are energy and grain and whatever needs to go into that. As the price of those things go up, the cost of things we buy goes up also, and it causes the price inflation.
Something that in all of this that's gone on over in Europe is that they've had so much energy turned off due to their green economy. I was just reading somewhere that Germany now has the same power generation that it had at the same time when the Berlin Wall came down. And I didn't check that stat out. Some listener might be able to tell me that that's not correct, but it's amazing to think about the basket of goods that they bought from the U.S. You guys should do natural gas. Oh, here's a pipeline. Oh, the pipeline's blown up. Now you've got to truck coal in from South America.
We'll send it over on boats.
So it's a wild thing, and it is inevitable that things are going to get a lot more expensive in places like Germany if you're throwing workers out of work because you can't.
I think inflation's a lot scarier of a prospect outside of the U.S. because of the dollar milkshake theory. We're going to be, their currencies relative to the U.S. dollar are more likely to inflate away. Bitcoin's already hit all-time highs in many other currencies, just not the dollar.
Oh, I haven't even watched it.
And it's not because Bitcoin's magically doing better in those places, because Bitcoin is a way to measure other currencies, and those currencies are losing faster than the dollar.
Well, imagine being in Germany right now. You had one of the most sophisticated, best part, the top of the food chain in a market is, can you add substantial value to whatever the commodities were? And Germany was like, we'll take this metal and turn it into luxury cars. We'll make really fine grade equipment, measuring equipment. But if you don't have factories, you can't do any of that.
And to think that it's all self-inflicted.
Yeah, well, and we blew up a pipeline. The U.S. blew up a pipeline. I think that's...
Yes, But either way, the Western states have brought this upon themselves, and the U.S. seems to be playing both sides of it a little bit.
Yeah, and it's shocking because you would think that even if you decide, okay, we're going to quit these nonsense policies about energy, it's going to take you years to build factories, to have engineers. I've heard especially it said, when are we producing nuclear engineers?
Right.
Almost never anymore because there's no work for them. So it would take you a generation.
And to get those projects ramped up takes a while, and there's so much red tape that that's the scenario though where energy is underdeveloped and we continue to increase our demands for energy, which has happened throughout history. We continually demand more energy, and if we've now underinvested in that energy infrastructure, what does that mean? It means that energy is going to become more expensive. Energy becomes a scarce resource, and what happens when you have a scarce resource? The price goes up if there's more demand for it. And so that's where, back to the ESG conversation in energy companies, energy companies are relatively cheap if we end up in a world where energy is still relevant. And
which,
right.
Unless you defy the laws of physics.
From a purely economic financial planning perspective, I think would be concerning to, when people say, I don't want any energy in my portfolio. It's you realize that much of what you consume requires energy input. So you are short energy. If you really want to make a difference and, around energy, you probably should stop consuming things that require energy, because as long as you're consuming things that require energy, you might want to have a hedge by also owning some of the energy infrastructure behind that. Otherwise, you could get caught off sides pretty easily.
Yeah, the big ag news recently was that they were hoping to make jet fuel out of ethanol, and that it like didn't pass the muster of like whatever it had to do. And so you have all these farmers that are like, appalled and angry, and it's like, well, that's not the best use of that energy. It's certainly not enough.
No.
There's not enough in there to be able to convert corn into jet flights. Like, let's think of another way to sell corn or to diversify and not make so much corn.
Yeah. It's going to be interesting.
Well, it is the starting to be the end of winter here in Missouri. What are you looking forward to?
Spring and fall are my favorite times in St. Louis. I grew up in Maine. I love the summers there. I try to get back there every summer because it's way too hot in St. Louis for me. And I don't really enjoy winter other than skiing and certain, snow sports. So spring and fall in St. Louis are my prime time here. So now I'm stoked. This last, 2 weeks or so, we had this amazing weather after that cold spell. We were outside at parks going for walks all the time, and that's my happy place, going for a walk in the woods. So
yeah, we've started I think the girls picked up from me, like now I go outside and try and pull my sleeves up and absorb as much sun as I can. And I've noticed my daughter's doing the same thing because we're just like little plants, right?
Yeah.
You just stick your head up there and it feels so good.
Sun does feel good.
Cold temperatures were pretty brutal for a little while there.
Indeed.
Well, David Oransky, thanks for coming back on the podcast.
Thank you.